Hello, everyone. I hope that you're having a wonderful evening or night, morning. Not sure where you guys are located individually. Today, we'll be having a price action lecture, whereas we'll recall upon the things that the information that I've given you guys so far. It's not a whole lot, but it is dense, and sometimes you can get lost in it. Like for the people that are new, today we'll be looking at Nasdaq and the ES. Before I go forward, is my audio okay? I'm looking in the community chat right now. Okay, amazing. Okay, so before I start to talk about the price action in this chart, I want you guys to look and see if there's anything that you can recognize. Anything, any fair value gaps, market structure shifts, liquidity grabs, liquidity purges, buy side liquidity, sell side liquidity. What stands out the most in this chart? What's the most important thing? The most important thing is time, right? Think about quarterly theory. Where do you see the major moves? Where do you see the major shifts? Where do you see the major entries taking place? Right? Exactly, New York session. So let me take the lipstick off. Let me put the lipstick on the charts right now. All right, so remember I told you guys that you should focus on 9 o'clock to 10:30. This is the best time to trade. I've said this multiple times, right? This is the best time to trade. During this time is when you can anticipate S&T divergence, which is where you have two closely correlated assets tip its hand to you that the market is about to change direction, right? So you will have the Nasdaq making a lower low while the ES failed to make a lower low right here, exactly at the time that I told you guys to focus on, right? Between 9 a.m. and 10:30. Algorithmic. Also, you have a higher time frame SMT, which if you look at the 1 hour time frame, you will see that. I'll leave you guys to do this in your own charts. Here you have the Nasdaq making a lower low here as well, while making a lower low here. So right here you have SMT occurring twice at the same time. Here, the ES failed to make a lower low. It also failed to make a lower low here as well. So this right here is the market tipping its hand that we are in a bullish environment. What else could help us to know that we are below the true open of the New York session, right? So we're below the true open. All of this is happening. This is something that you need to write down. If we are not below a true open, then and you see SMT, you see bullish SMT above a true open, don't pay attention to it, okay? Not important. You don't pay attention to that. That is not even SMT divergence. That's just the market trying to play with you, basically, right? So SMT divergence has to occur within specific parameters, okay? So this is one of them. It must be below the true open or else it's not SMT, right? There are other more complex things that you will learn about SMT. But for now, this is what I will need you guys to be going into your charts and study, right? Every time you see SMT work, it's below a true open, whether it is the monthly cycle, the weekly cycle, daily cycle, 90-minute cycles, or the micro session cycles. This is when you will see SMT working most, if not all of the time. So right here, we could see price ran below this low, which was the low of London this morning. Right after it ran below New York's low. See? So price deliberately ran below New York's low, then London low. After price traded above this down close candle right here, which is a order block, you know, basics, down close candle, the last down close candle before the up move, the last down close candle before the up move, right? This is the order block right here. So price took liquidity, traded above here, right? You don't really need a market structure shift. You just need SMT and a PD array to present itself. So you have an order block right here, then you have a fair value gap right here. Your entry would be in this fair value gap, right? Or if you want, you could use the order block. This is the only place that you should really be using an order block, right? When you have confluence like this, right? You know, you're within this window right here, which is Q3 of Q3, right? Today is Wednesday. Like, I chose today specifically for this lecture. Today is Wednesday, which is Q3 of the weekly cycle. And then this occurred during when? Q3 of the daily cycle, which is the New York session. And then Q3 within the 90-minute cycle, right? This is all algorithmic. This is the best day. This is the best day, the best time to be trading, right? Right here. So after we had price change its state of delivery, which only happens after SMT, price has taken liquidity at the time that it's supposed to. Price presents a fair value gap or an order block, trades back down into it. Look at these diagonal highs right here. Liquidity, obvious liquidity. After price trades down into this, price starts to rally, right? So it starts to rally, seeking the liquidity above this high, right? Another thing is we were in premium. No, we were in discount. Please forgive me for that. We were in discount, right? If you measure this high to this low and you draw a line right here to cut the top portion and the bottom portion in half, you'll see that we would be below the equilibrium of this dealing range, right? So below here, below the equilibrium of the dealing range, we have all of this taking place. All of this. This is what high probability is. For this, there are times when you don't need a higher time frame PD array and when you can just focus on time, which it will not be as high probability as when you have the PD array, but this is still high probability, right? You have time tipping, you have price tipping its hand to you, SMT occurring at the right time, right? So, if you see SMT on the 5-minute time frame during this time, is high probability. You're in discount. You have a higher time frame SMT as well, right? You're trading during Q3 of Q3. This right here is the perfect setup. If a setup, this is a setup that forms 75% of the times, right? So if every Wednesday you can look at this time and you would more than likely see something like this. And we'll go back to ES and we'll analyze it the same way, or we'll go over the price action the same way. So right here, you can see that ES had a higher run up, right? It was more explosive to the upside, which makes sense because it failed to take this low. Well, NASDAQ did. This, right, whenever you see this happens, then you know ES would be the better trade if you are looking for more points, if you're looking for a bigger move. But if you're looking for a cleaner trade, then NASDAQ will present that to you. So you have ES failing to make a lower low right here and right here as well during Q3, trading down below the true open. Very important, right? You see, if price was above the true open, we wouldn't be looking to buy right here. You wouldn't be looking to buy right here, right? You wouldn't even be looking at this chart right now. So price trades below the true open. That's when you buy. Over, if you look to the left, you can see price. You can see that the wick down to this inverse fair value gap right here, and this inverse balance price range right here. Right. So we had price trade above the true open and began to consolidate at the true open with the lower time frames right here. I'll hint at something right now, which most of you will get, if not all, is that whenever you have a true open that aligns with a breaker, that breaker is high probability right there. That's a real high probability breaker, right? That is time-based. This is a time-based breaker right here. Wasn't planning to talk about this right now, but there you go. We'll go in great detail further. We'll have live sessions. I'll see if price presents anything tomorrow, which we can work with. This week has been a mess. The SEC has been delaying Bitcoin's ETF. You know, they've been hacked. All of this stuff going around. Even right now, we're not really sure if they approved it. They say that they have, but you know, I'm waiting until tomorrow at least to see if all of that is true. So here we go. So that right there is so we just had a decent lecture about into price. You guys can dig a lot into that. Now I have to go back to this right now because this is very important, right? Look back, cash forward. Remember what I told you guys in, I believe, the first lecture. The algorithm works when it comes to directional bias. The algorithm focuses on the daily time frame, right? So price will change its direction every 60 days or so. About that time period, every 60 days, you'll see price shift, right? Right now, we're almost upon that time. Every 60 days. So right here we go. We have buy side liquidity here. This is what I think we're gonna see, right? So from this low, which is where price shifted within the last 60 days, we've been going up with barely any pullbacks, right? Right now, we are getting really close to where the next quarterly shift should take place. And why do you use this low and why is this low relevant? Okay, I'll show you that too. When you go on if you go on the 4-hour time frame and you go to the extreme low, and you go to the extreme low, you'll see that there was SMT divergence. Where's the right here, right? So this is how you grade or you cast. This is where you cast forward from, right? Where you have SMT. So here, ICT thought that this occurs on the daily time frame, but with my experience, obviously, and as you guys can see right now, it either occurs on the 4-hour time frame or the daily time frame. Whenever we have this occurring on the 4-hour time frame, then we usually see more volatility, right? That's just how it works. That's just what usually happens. So if it's on the daily time frame, really visual, easy for us to see, it usually has more pullbacks than when this happens on the 4-hour time frame. Something to do with time sequence, which we'll talk about in the future, of course. So we had price right here fail. This happened October when it was the seasonal tendency for price to be bullish. This happened 60 days after the previous quarterly shift, which allowed price to be down to this level. So right here we were anticipating, which I was publicly on Twitter, I was anticipating price to go higher. So you'll be cast forwarding from wherever price made the low right here. Hopefully you understand that. So there must be SMT divergence for you to be able to identify a change in trend. And it must happen in the right time window. Just as how it happened here. Right here you had NASDAQ made a lower high. This was 60 days back. Then you have the S&P 500 making a higher high, right here. And as you guys can see, just as I talked about on the daily time frame, when it does it, there is a lot of pullbacks. But when it happened in the lower time frames right here, where it just seemed as price just pumped with no reasoning, it happened on the lower time frame, which is the 4-hour time frame. On the daily time frame, it just looks as if a daily candle traded below this one and then formed the order block, where here it just looks like price just closed within this order block and then continue to rally higher. So 60 days from here would be January the 24th. So January 24th sometime we can look for price to be positioning itself to go lower. So maybe sometime in February we'll see that begin to occur, right? So at this area we can expect some consolidation. We can expect price to pull back within this range, peep above this high, pull back again, and until it forms proper buy-side liquidity, which it should run above, and we should be able to spot either a 4-hour or a daily SMT divergence. I'm trying to keep these not extremely long so you guys can, I could stretch them out as much as I want, but I need you guys to have something that you can rewatch, 3 times within, 2 hours or so. And of course, today we'll be diving into the things that I gave you guys about Q1, the thirds of Q1 a little bit more. And I'll give you guys some things that you should study with it. So right here, this is Q1, right? And please, what I talked about for the last 10 minutes, the quarterly shifts, the time-based quarterly shifts, we'll go deeper into that, but I have to keep giving you guys the basics until you understand, because most of you it will just go over your heads, right? And we have a specific section in this group for questions. If you have any questions, I'll be there. I'm still replying to all of you guys in my private, I'm still replying to all of you guys that message me privately. And if I haven't gotten to you, then I will get to you guys soon. Don't worry. It's just that, replying to 300 messages at the same time isn't, quite easy, but I know that I took that responsibility upon myself, so don't worry, I will get to you guys. Okay, so now we're going to look at the 3/3. So right here, T3, T2, T1, T2, T3, right? Oh, hold on. My bad. I was going into something else that I shouldn't go in as yet. Oh my gosh. Almost spilled the beans. Okay, so right here we have T1, T2, and T3 of this morning's New York session, right? So right here we have obvious. If you look at the quarter as a whole, this would seem as if it was, distribution. It would seem like it formed a range. But when you pay attention to just T2 and T3, you will then realize that this was actually consolidation, right? You can use T2 and T3 to project and get a idea of where you can probably find the low of that session, right? So right here we have, if we put it down by 1 standard deviation, which is where it usually goes before it rallies or reverses, right? So even if price was trading here, you could have this right here, this range highlighted, right? I'll give you guys more information about this. But for now, this will do, this will help with all of you. And I know that there are leakers in this group. I really don't like you guys, but I'll get to you. So one standard deviation of T2 and T3 will project the low of the session or the high of the session, right? Even if you put it above while you are bullish, you can use this to know where retracements will occur. As you can see, price went here, and it traded back down into this bullish breaker right here, right? Just as our price traded here, wicked one standard deviation. This is in your charts, right? You can't, if you go to your charts every day, you'll see it tomorrow again, you'll see it the other day, right? This is algorithmic. And I hope some of you understand why I take baby steps, because even this right now that I'm showing you, right? Even this is basic. This is basic stuff. There's a lot more crazier stuff than this, right? And this is quarterly theory, right? So you can use this even with the micro cycle. You can use it with the weekly cycle, the daily cycle, you can use it with all of that, right? And if I use, the funny thing is, if I used it with T1, you wouldn't see such a projection, right? Only works for T2 and T3. And just as how, we have different thirds that have different functions, the same goes for Q2, Q3, and Q4, things that you'll learn eventually. So this right here, I want you guys to go in your charts. I want you guys to check this. I want you guys to, text in the chat confirming that it works, right? So yeah, this is what happened. And how do you know that? Right, using this can save you from a loss at times, right? Because when this happens, you want to see this precision right here, right? So when price in Q2 when we saw price trade right here and then rally, then we wouldn't react, right? Because guess what's happened? Price did not trade to the low of this standard deviation right here, right? And then while this happened, it's actually crazy. Don't know why I'm talking about this stuff, but we had SMT divergence right here, right? So this low was purposely left. We whipsawed above here to take the buy stops above here. We took out buyers. We took out the sellers that had we took out sellers here with this move. When price traded down, we took out the buyers that bought above this high with buy stops. And again, below this low, we took out the buyers that, got in right here. Then there was SMT. During when? All of this occurred during Q3, if you can see. Right, so all of this is fractal. ICT gave us a lot of hints towards these things, but ain't nobody, got on with a 90-minute cycle like this. There is no one that did this. There is no one that talk about this right here. They just stuck with, the regular Asian range or whatever Michael talked about, right? No one talked about this. And this is basic because even right now in the charts, there's something that you guys are still not seeing, which I hope that you see and someone can, talk about it. And then I will probably go into it a little bit earlier. So Michael gave us the foundations for all of this, right? And as you guys can see, it's there in the charts. Their price isn't random. It works. I've traded with this before. I just haven't put it on my charts, right? For years. And yes, I hope that you guys can glean from this lesson, right? The next one will be a little bit deeper, and I'll be looking at your questions, for people that are lost. If you are, then I'll probably have another, this week I'll probably have another beginner price action lecture, right? So I can get you guys up to par with everyone else. So I hope that this was enough for today. It's very good information, I believe. I've been trying to break up the algorithm in, parts for around 4 years now with no break. Yeah. So like even when I'm not with you guys, yeah, I'm still working. I'm still in the lab. We're still grinding. I'm still finding new stuff even right now. I found stuff that I don't understand quite as well as yet, but we'll get to it eventually. So I hope you guys have a blessed night. I hope you guys find something to do tomorrow. Right? We have news tomorrow, so we should find something to do. If I'm not with you guys Friday, which I will try to be with you guys Friday, I could give some of you that are like beginners another lecture, something that will probably explain things easier, hopefully. But I will definitely be with you guys Sunday and Wednesday of next week again. I'll probably be posting charts over the course of tomorrow and Friday. And yeah, that's it for tonight. Hopefully you guys drew something from here, right? And please don't share this. Well, not yet. Have a nice night, everyone. I'll speak with you guys in the next session.